Welcome back to Fast Market here on the Schwab Network. It's time for our Cash Tag segment. For that, we're going to bring in Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking Airbnb travel. It seems like the consumer's still out there traveling, right? We've seen a pullback in some of the travel names, whether it's hotels, whether it's Airbnb. We've pulled back a little bit over the last several months. Are you still seeing positive data? Because it still seems like airline, tickets are elevated. People are still out there traveling, having experiences. But are you seeing any weakening data?
Yeah, so whenever we look at travel as a whole, we still do see consumers prioritizing those experiences. And so this is an area where, we're seeing some strength considering macroeconomic headwinds. However, when we look at Airbnb in this realm of travel, we do see some weakness comparatively. Airbnb has some headwinds working against it. It's got some pending legislation, just whether that's from specific users or, entire cities like New York City is working to curb access. And we also have some souring metrics on our end. And we can look at two of those, which I think kind of highlight what we're seeing. And the first is web visits. Whenever we look at consumers who are going to Airbnb's website to book a potential vacation, those are now trending down by about 5% year over year, which doesn't necessarily sound like a lot, but it confirms that for us, we're continuing to see a deceleration in those individual bookings with Airbnb hit on last quarter. And also, whenever you look at how these web visits shake out versus more traditional peers, you can see that this isn't a systemic weakness across all of travel, but this is pretty isolated to Airbnb and its booking model. And so this for us is a little bit troubling, and you can see that how that shakes out here on this chart. We saw a relatively weak, the first signs of that deceleration in the peak summer season, and it has not improved. So for us heading into this, we see, potential problems mounting for Airbnb. I think the second point that we can hit on is consumer happiness levels. When we look at consumer happiness levels, Airbnb is once again significantly trailing the pack. I don't think this is any surprise, but that gap is getting wider. We look at Airbnb's happiness levels versus its next closest peer. It's a 15-point spread, and that's not good. And so for us, for Airbnb, we're not very optimistic heading into this report.
Megan, this data's terrible from LikeFolio.
I was waiting for Kevin to say that.
What I read is they're growing, their margins are growing, they have more demand than pre-pandemic. They're an asset-light model that's cranking out free cash flow, but your data shows a big divergence in what you read about Airbnb and what your data is showing. Why do you think that is? Or is your data more high frequency than some of the things we may be seeing? Because, wow, that is not good. That is getting weak, and that is getting weak when some of the other people are getting stronger.
It is. And, sometimes it's for us, we love whenever opportunities like this emerge because this is kind of a divergence. And this is really a result of, us listening to what consumers are talking about and pain points from consumers. I think one area that this highlights is previously, Airbnb has been able to kind of offset some of these deceleration in bookings by increasing the prices. And I think that this shows that is starting to weigh on consumers, and that pain point is getting larger, that maybe Airbnb doesn't have the pricing power or may not be able to hold on to the pricing power that it has had for a while moving forward. I know just anecdotally, the last time I went to go book an Airbnb, I looked at the listing on Airbnb versus the management site directly, and the discrepancy was about $600 for a 3-night stay. And I think that this is what is starting to show up in our data, that consumers are realizing and that potentially management companies are realizing that, okay, maybe we can just book with the consumer directly and, bypass the middleman. But I think that pricing power is something to keep an eye on, especially as we see happiness levels here where they are. And I think too, whenever you consider some of the legislation that's underway, consider New York City, for example. I think that the the legislation to curb some of the access went into effect in October, and it dropped listings on the site by 80%. And that's pretty significant whenever you're talking about 40,000 listings, I think was where the city stood. It was the second largest urban area in the U.S. for Airbnb. So, there's definitely some problems ahead when you have major markets like this who are kind of fighting against a company like Airbnb and fighting against its core business model. So this is one that, we just don't have a lot of optimistic things to say, at least from the consumer's perspective, ahead of this earnings. While we can't speak to pricing, how Airbnb has been able to increase those prices, we definitely see signs of that, and how that will play out in margins. We can't calculate that, but we can see that long term, it could have some negative impacts on its potential growth.
Yeah, I just recently did that for a trip in February where I'm looking at a price on Airbnb, and then it's got the name of the company that has the Airbnb, and then you go directly on their site. Not every Airbnb is managed by a management company, but it was like 23% below what the advertised price was. And that's the big thing, Megan, with this company. And it's an asset-light model, right? They don't have free cash flow is massive for this company. But your happiness levels on Airbnb, that is all probably due to when you book something for $200 a night, it ends up being $300 a night because of all the fees. Is that the reason you see weak happiness levels?
Yeah, a lot of it is due to pricing. A lot of it is due to inconsistency and a lack of customer support. People talking about showing up and maybe the Airbnb is locked or they're unable to access it, or the host is horrible and there's really no recourse. And so they're essentially stranded at their travel destination. Mm-hmm. And so I think that these are all things that Airbnb has definite room for improvement. Maybe they can resolve some of these problems. But for us, happiness is often a long-term indicator. It's perhaps our most powerful long-term indicator. So when we see underperformance like this, especially versus more traditional peers, it makes us less likely to be willing to bet on this company in the long term. And so this is a name that obviously I think that this data suggests, we have a bullet or a bearish outlook heading into this earnings event, but this isn't one of those instances where we say, okay, if we see a pullback, we're picking up shares. This is one where we're starting to see, cracks in the foundation form from a consumer perspective that, we're looking at this from a bearish perspective, even on the long-term horizon.
Yep, that's why hotels been outperforming a little bit. But, this stock still hit 52-week highs just a couple months ago. So,
but it's a verb.
Yeah, it is a verb.
It's like Uber.
Verbo.
I'm Ubering
Airbnb.
and then Airbnb.
Yeah.
It's like a sentence.
Yes.
I'm Ubering to my Airbnb.
It is. They need to get rid of those fees. All right. Great stuff as always. Great data, Megan. Have a great day.
Thanks, guys. You too.
All right. That's Megan Brantley,
Vice
President
it's
of
all
Research.
Crumbling. That's what's happening.
LikeFolio. It's pretty dour, Kevin.
The stock have you